Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 27th of March. So trade war has escalated, and as you can see, European indices are down across the board and US futures are trading lower as I speak. Unsurprisingly, the car makers in Germany are leading the declines, or are among the biggest decliners, as you can see on this website, showing big falls for the likes of Porsche, Mercedes, and a few other car makers such as BMW and VW as well. Following Trump's announcement last night, we saw the German DAX index stage a sharp decline as concerns were raised about the European car makers and their profitability. So we saw the DAX print a bearish engulfing candle on the daily chart, breaking support here at 22,760. This level right here, which was previously the base of the prior breakout that caused the index to rally all the way to test the prior all-time high, where it formed a potential double top pattern. So this pattern has not been confirmed yet because we haven't broken major support levels, but that could happen in the near future if the selling pressure continues. But anyway, the key level to watch now is this level right here, which is going to be significant in so far as the short term is concerned, or the area around that zone to around this level right here at 22,659, which marks the previous day's low. So for as long as we remain below the shaded gray area, the path of least resistance will be to the downside for the German DAX index. And from here, we could see the index go on to break a few other key levels. For example, this low right here at 22,240. And then below that, we have this low coming in at 22,117 before the index tests this key support area and the bullish trend line. Will it get down all the way to that area remains to be seen, because we've obviously recently seen the approval of a major stimulus package in Germany, which is why the market has rallied as much as it has done in the last few months. But the market does look quite overstretched at these levels, because, you know, if you look at the long-term charts, for example, the weekly right here, it is looking quite expensive. The RSI, for example, the relative strength index, is now coming down a little bit because we have seen some consolidation in the last few weeks. But previously, the RSI was at 80 on the weekly time frame, following a massive rally in the last few months. And if you look at the monthly chart as well, this is the monthly chart. You can see that we've had consecutive month-over-month gains in the DAX index, and that has pushed the RSI to extreme overbought levels of above 75 or thereabouts. It is coming down just a tiny bit, the RSI is, but it still remains above the overbought threshold of 70. So more work is needed from the bear's point of view to make this market a little bit less overbought. But let's look at the daily chart again and try to identify a couple of support levels to watch. Well, the key level for me is the area where the trend line that has been in place since August of last year comes into play. And that area, as things stand, is somewhere around here. But obviously it depends on how fast the market potentially drops. I'm not saying that it will necessarily drop, but if it does drop, how fast will it drop to get to the trend line? But the key level to watch is potentially this area right here at around 21,800 zone, where previously the DAX had encountered some resistance before breaking higher. So I think that's the short-term support level to watch. Below that, and if you go below the bullish trend line, then you could be talking about the highs that were made in December, which comes in all the way down at 20,526. So a massive drop from here to get us to that area. Will we get there? Remains to be seen. But as I said, the market is looking quite extreme in terms of overbought levels, and it will need to unwind either through time or price action. If the RSI unwinds through time, meaning a consolidation, I think that would be considered a bullish scenario. But if it sells off sharply, that too will get the RSI levels down, but it will be considered as a bearish development. Let's have a look at the Nasdaq, because it is testing a key area of support. This trend line had been in place since January of 2023. It broke that trend line a few weeks ago. We then consolidated for a few weeks, and then the market rallied and reestablished this trend line. However, following yesterday's news, the market sold off again and stopped right at the trend line. So what happens here today will be very important. If we post a daily close below this trend line once more, I think that would be a bearish scenario. And in that case, we could well see the Nasdaq drop to take out liquidity resting below the most recent low, this hammer formation from Friday. The low of that comes in at 19,403. And thereafter, you have the low from earlier this month at 19,115. Those are the major downside targets. But to get to those levels, we'll need to see some further bearish price action below this trend line. In terms of resistance levels to watch, well, the first one is this level right here. If we move to the weekly chart, this level at 19,944 marks the previous week's high. Subsequent resistance level to watch would be this level right here, marking the low from Tuesday's range at 20,090. Thereafter, we have this level coming in at 20,275 and then the 200-day moving average. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.